everyone. Thanks for tuning in. This is Amy Stacy with Front Real Estate Company and the Bird Eye Real Estate team. And this is my friend here, Mike, super lender, Mike Kleckner with Caliber Home Loans. And we're here to talk a little bit today, kind of a little bit of a follow-up to the pre-approval, pre-qualification conversation we had a little bit earlier. Just kind of understanding that a little bit more in depthly. So we're starting the buying process. We come to you and we say, hey Mike, I need a pre-approval letter, right? We want to go all the way through and really know what we're looking at. And so they get pre-approved, and then they come back to me and say, this is what we can do, and we're going through the process and we're looking at stuff. And then they start asking me questions about, what can I do now that I'm pre-approved and we're in this buying process? What can't I do? What are those things? What do they look like?
Yeah. So good question, and really an important piece of this puzzle. Because when you're in the buying process and you have a pre-approval, it is going to be really critical to make sure you pay all your bills. Okay. Keep in mind, let's back up a step. Keep in mind that a pre-approval is going to last for 120 days. Okay, so the day that I take your credit report, so today being November 7th, it is good from 120 days from today. So at that point in time, if it's November or if it's 121 days, in order to get under and close, we have to pull a new credit report. There's some things that obviously are going to come into play. But let's assume that we're within that 120-day time period. So a couple things that you want to make sure you're doing: paying all your bills.
Right.
Of course, if you currently own a home, certainly pay that. Do as you would normally do when it comes to paying your bills. That's an important piece of the puzzle.
Your credit solid.
Keeping your credit solid. Do not apply for a new credit card or a new car. If you think you find a house and you put an offer in and you get it accepted, and you say, fantastic, I need new furniture, do not, I repeat, do not go and apply for same as cash financing to buy the new furniture until the loan is closed and funded. Because what happens is right before closing, we pull another credit report to make sure that you didn't go buy furniture and or a new car. Many times, unfortunately, we've had situations where buyers have done that, and that ultimately causes a big problem.
Well, let me ask you this question. What if you are in the buying process and like you said, you got the pre-approval, you're getting under a contract for a house, and your car just bails out on you, right? And you have to have a car. You have to have transportation. If you're out in the suburbs, you're not going to maybe have a bus line to take you into where you work. So what do they need to do if they literally have to go purchase something because they have no other option?
Yes, and that sometimes happens. I mean, certainly no doubt that happens, unfortunately, right? I mean, the unplanned event is likely going to happen, if it's going to happen, during this time period, right? What's that, Murphy's Law?
Yeah, exactly.
So yeah, and sometimes that does happen. So the first thing you need to do is you need to pick up and call me and say, Mike, my car's dead. Like it's not going to work, it's not going to run, it's going to cost me this much money to either fix it, or I need to potentially go buy a new car. So what does that do from a pre-approval perspective, and does that change anything? If you don't have a car payment today, then it's definitely going to change something, because now all of a sudden you have a car payment. If you have a car payment today and your car dies, hopefully it doesn't, but if you have one and you replace it with a similar car payment, not that big of a deal. So it's all going to depend on the circumstance and the situation that you are in. But the first thing you should be doing is calling me and saying, Mike, my car died and I need to get it fixed, or I need to get a new car.
So in this scenario, because when you go buy a car, they're going to run your credit again. Is that going to hurt your credit when you go to closing table and you're running that again? Is that going to, or if they tell you ahead of time, then you're going to be prepared for it and you know what that impact looks like.
Yeah, so great question. So we as a lender don't care about necessarily from an inquiry perspective once we have your credit score. So if we go past that 120 days, there's potentially an impact on your credit score for those multiple inquiries from buying that car. But if we're in that 120 days, the only thing we're going to really care about is what is your new car payment. So we always pull, like I said, a credit. It's a credit report, but it's really not. It's more of a They call it an undisclosed debt monitoring system. So basically anything that's not, that you haven't told us about or anything that's new, it'll pop up and be like, hey, I got a new car payment, and you need to know about it. So it's a system that we use. So it's in conjunction with the credit reporting agencies, but it's not necessarily about getting a new score. Because we don't reevaluate your score at that time. We just reevaluate whether or not you have any additional debt from the time of the application.
Okay, that's great. That's great information, actually, because I don't think a lot of people understand what that looks like from where you're sitting.
Yeah, and I think that, to your point, it is really important. I mean, I of course try to explain that to everybody, but there's a ton of information going on back and forth, right?
Yeah.
So, if it's missed or whatever, that's certainly understandable. But always, and you're in that home buying process, really, if there's any questions, always give us a call and say, hey, Mike, this is what's going on. What does that mean? What does that do to us?
Okay, so let's talk about this. So what about employment? So someone is in a current position, they know they might be coming up for a promotion or something of that nature, and they're not thinking it's going to happen within the cycle of from contract to close, but it does, and it adjusts their salary. Would that affect their purchase power, or is that too short term?
Yeah, so that's a really good question. So think of it from a couple different scenarios, and not to get too much into the weeds, but if your pay is the same and you're just getting paid more because you have a higher responsibility, that's going to help you. So now we have a new contract that says you get paid, instead of getting paid X dollars, you get now paid X plus Y, and that's going to be your new rate of pay. So in theory, if you're not under contract, then we can potentially increase your buying power.
But under contract, it doesn't do anything to them. It just helps them with the cushion, right?
Correct.
So what if they had been interviewing for a position at another company and they accept this position, and it's a positive for them, but it's going to happen during that cycle of contract to close? What happens then?
Yeah, so again, great question. It really is, what it boils down to is the pay similar? So when I say that pay similar, not necessarily about the dollars, because one, hopefully you're getting a new job not to get paid less.
Yes.
So that's less likely going to impact you. But if you go from a wage earner, so what we call a W-2 employee, to somebody that maybe gets less of a base but is now commissioned, so has the opportunity to earn more, but you haven't ever earned any commission, we can't count any potential income.
Right.
We can only count what your base pay is. So if your base pay is lower, well, then we got to lower that, and that ultimately potentially causes a problem. So if you're not adding commission, or bonuses wouldn't necessarily change your base pay.
Right.
So really, it's your base pay that's kind of the key number in all of this, because if that goes up, that's positive.
Right.
If you go from less base pay and now in commission, now you have a different source of income, and that then ultimately causes, which we can get into that. We'll get into those weeds a little later in terms of what that really means. But again, certainly don't want to ever stop somebody from taking a promotion.
Right.
But again, it's worth that conversation, even if it's just say, hey, we're closing in 2 weeks. Can I start my start date on 2 weeks plus 1 day type of thing, if there's other ones that
Right. Good. What about one more question, because this is important, because I know this from experience from people that I've worked with. They've been in different scenarios, and it comes up a lot. People are asking these questions about these big changes, because your employment and your earnings is a big part of what you can do, obviously. So what happens if there's a layoff and they're under a contract for a house?
Yeah.
How do we address that?
Yeah, that's a good question. If it's a layoff, you no longer qualify for a home, unfortunately. So what that means is that obviously you can potentially find a new job within a short period of time. But generally speaking, and this is more of your side in terms of the financing length of time and the approval and all that stuff. If you're within that, there's ways obviously to get out. If you're outside of that, then it becomes a little bit more complicated, and that's really more of your expertise. But unfortunately, yes, if there's a layoff and you do not find another job, even though you're going to get a severance potentially from that company that you got laid off on, that income is going to be gone at some point in time. So it can't be counted. So that is a deal breaker.
Just asking those 3 scenarios.
Yeah.
A little bit of clarification. For
all
folks.
real scenarios, all
Yep.
things that are really important. And I think the biggest key to this is when in doubt, call your team.
Yep.
Call me, call Amy, and we'll get the answers to you, and we'll help you get as much information as possible so that you can make the best informed decision for what's best for you, and ultimately understand what that means.
Absolutely. We are your team, and we're here to help you. Again, from start to finish and after. We're always here. We've got resources. We're still advisors. We can help with a lot of different things. So just don't forget to let us know if you have questions and need information and resources and all that good stuff.
Thanks for watching. Again, this is Mike with Caliber Home Loans. Give me a call anytime. Talk about your questions, those pre-approvals, and then Amy Stacy with Front Realty. And when you're in the market to buy or sell, she's your guy.
I'm here. And look us up on your social platforms too. We want to hear from you on social. Let us know what you want to see more of, etc. Any questions you have, you can put there too. That's great. Appreciate you guys.
Thanks.
Have
Have a
good
great
one.
day. Yep.